In this presentation, we'll review income sources, gross pay, net pay, deductions, and the effect of taxes. Gross pay is a calculation of wages when the hours worked are multiplied times the wage earned. Net pay is a calculation of wages when taxes and deductions are subtracted from the gross pay. Income can come from a variety of sources. For our purposes today, we will focus on compensation coming from wages, salaries, commissions, and benefits. For individuals that work on an hourly wage, a standard work week is typically 40 hours per week. To find your gross pay, take your hourly wage times the hours worked. The current federal minimum wage is $7.25 per hour. The highest minimum wage is in Washington, D.C. at $14 per hour. The highest state minimum wages are California, Massachusetts, and Washington at $12 per hour. When an hourly employee works more than their 40 hours per week, they're said to be working overtime. Any additional hours pay 1.5 times the regular rate per hour, otherwise known as time and a half. Using minimum wage as our baseline, here is a way to look at figuring your wage for a regular work week. Any additional hours beyond 40 would be paid $11.33 per hour. This one should be easy. What is the gross pay for an individual that makes $8 per hour and works a 20-hour work week? If you said $160, you're correct. This one will be a little bit tougher. What's the gross pay for an individual that works 44 hours in a week at $9.25 per hour? Pause the video and figure the gross pay. During a regular work week, we would earn $370. Our overtime pay rate is $13.88 after we round the figure. With 4 hours of overtime, we would make $55.52 in overtime, and our total gross pay is $425.52. You may be surprised to find out that more than 75 million workers in the United States get paid by the hour. That's 60% of all working individuals. While not every hourly wage earner makes just the minimum wage, in the food service industry, 44% of individuals working do. 58% of individuals making the minimum wage have graduated high school but do not have a college degree, and 28% of the workers do not have a high school diploma. When referring to an individual working on a salary, it means that they are earning a set amount of money over the course of the year. They typically will be paid in even installments, either monthly, weekly, bi-monthly, or bi-weekly. When describing an individual who's paid on commission, they are earning a set percentage on every sale that they make. For example, on a $200 sale at a 5% commission rate, they're making $10 per sale. Employee benefits are non-wage compensations. They include, but are not limited to, healthcare, sick leave, vacation, retirement, tuition reimbursement, gym memberships, company vehicle, mobile devices, personal computers, and discounts. These are all determined by the employer themselves. Deductions come in many forms. Student loans, retirement accounts, and healthcare accounts reduce your taxable income. These are called pre-tax deductions. The most common deductions from your paycheck include Social Security tax, Medicare tax, federal income tax, and in many states, state income tax. Both federal income tax and state income tax in Iowa are known as progressive taxes. That means that the average tax rate increases as more money is made by the individual. Currently, the federal income tax rates are between 10 and 37%. In Iowa, the state income tax is between 0.36% and 8.98%. The Social Security tax is a trust fund and is used to pay for current and future Social Security retirement benefits, benefits for widows and widowers, and disability benefits. Medicare is a government-funded healthcare program for individuals age 65 and older.